of what we do. In terms of where we've been, we launched Pacaso in October of 2020. So we're 4.5 years old-ish following our launch. And in that short 4.5 years, we have accomplished a ton. We've generated 1.1 billion of gross, or sold rather, 1.1 billion of gross real estate transaction value. We've generated 125 million of adjusted gross profit. We operate in about 40 destination markets and have booked 100,000 stay nights. So we are off to a really great start. But what's more exciting than the great start is the massive opportunity that we have ahead, because we are just getting started and the market opportunity ahead of our business is absolutely massive. When I think about this opportunity and our category that we're creating, I think about it as living somewhere between traditional real estate and traditional travel, with traditional real estate being buying a whole home and traditional travel being renting a hotel or renting somebody else's home. There are tens of millions of people who aspire to own a second home and either can't afford or can't justify owning 100% of something they're only going to use 10% of the time. So that is our opportunity. Our opportunity is to enrich millions of lives around the world by making available this newer, smarter, better way to own a luxury vacation home. In 2024, there were a few themes that really guided how we executed and led to these really strong results, and also set us up for a really strong 2025 and beyond. The first theme is around our refocus on the high net worth luxury consumer. While we have big aspirations to serve a broader audience long term, we're very much focused on high net worth families who want luxury homes today. And this is a strategy, with the strategy being starting at the high end first, that many category creating companies have proven before us. One example that I like to talk about is Tesla. People know Tesla today as the leading electric car manufacturer that has a range of vehicles, many of which are accessible to a broad audience. But they didn't start that way. They started with a very high end, very out of reach, very exclusive car called the Roadster. And that Roadster enabled them to launch the brand, and they eventually went down market over a period of 15 years or so. So we're still selling Roadsters, which are super luxury homes that are attractive to high net worth families. And this is a big opportunity for us, but it's also a foundation for a much bigger opportunity over the long haul. The second big theme in 2024 was around focusing on being more targeted in the way that we market and the way that we sell, as opposed to our prior strategy in the first couple of years when we were establishing the brand. We were focused at 50,000 feet, really educating the world on Pacaso, educating the world on co-ownership, distributed our marketing dollars on a national scale, reaching a broad audience. But now that the brand is largely established and we have laser focus and clarity around who our customer is, that gives us an opportunity to be more targeted in the way that we market and the way that we sell. So that's definitely a big theme that guided 2024 and will carry forward into 2025 and beyond. Market expansion is another big theme and will be a bigger and bigger theme as time goes on. And the thing that I want to talk about here is global. This map is really just illustrative. It doesn't actually include all 40 of our destinations, but the illustrative piece of it is it shows that most of our markets today, our destination markets, are in the US. Of the 40-ish markets that I mentioned, 37 of them are in the US. Only 3 of them are overseas. So the opportunity overseas is just massive. I mean, the opportunity in the US is still massive, but there's just so much white space outside of the border. Today, we are only in Paris, London, and Cabo outside of the US. But if you think about all the places where people want to travel and own second homes, the list is very long. Throughout the Caribbean, other parts of Europe, Latin America, so many opportunities for this business model, because almost regardless of where you're at around the world, people aspire to live better lives. People aspire to have a happy place. people aspire to spend more time with family and friends and people that they love, and that is what the second home is all about. The fourth and final theme that I want to talk about for 2024 is global swap. In October of last year, we introduced a feature called Global Swap that enables Pacaso owners to swap time in their home with other Pacaso owners around the globe. It's pretty intuitive as to why this feature, is so valuable for our customers. It's like if you own a Pacaso in Napa Valley, but you and your family want to, go to London or Paris for a week, you now have the opportunity to use some of that currency, if you will, in your Pacaso home, which is your time, by swapping time with somebody else. This is a complete game changer for our customers. I've had an opportunity to speak to many of our customers who have completed swaps, and the success rate on swaps is 100% of all the calls that I've done. I mean, everybody is just over the moon about this feature because it delivers a lot of value, and the consistency of the Pacaso experience around the globe is familiar. Meaning if you know what it feels like to check into your Pacaso in Napa, when you go to check into somebody else's Pacaso in Paris, it's going to feel very, very similar and very elevated, which is really awesome. So we're super excited about swap, and we think that the opportunity here is almost limitless in terms of the value that it can add to our customers. And we're going to be doing a number of things to continue to enhance the swap functionality, just to make sure we are delivering the best possible experience and innovating in new and interesting ways. One example of that is our white glove scheduling feature. So as we build out the swap functionality and add more and more features, one of the things that we want to make sure that we do is just keep it easy for our customers. So we actually have a white glove scheduling feature where you can just call a human being on the Pacaso team and have that expert human being on the Pacaso team help you to identify the right swap either in your home or in somebody else's home, so that the experience is seamless from start to finish. So those four themes illustrate just a few of the many things that we did in 2024 that led to really incredible results, all things considered, given the market that we're in here. And most importantly, the themes that have really set us up for a very strong 2025 and beyond, which I'm super proud of the team for. So that'll conclude my remarks for now, and I want to hand it over to Al, who will walk through the financial results in more detail.
Awesome. Thank you, Austin, and thank you all for joining us today. Before I get into the exciting results that Austin was talking about, I want to spend just a moment talking about the business model, just as a reminder. And I'd say one of the most powerful aspects of Pacaso's business model is how it monetizes value across the full life cycle of home ownership, right? It's not just at the point of sale. We've really built this end-to-end marketplace with multiple revenue opportunities throughout the lifetime of our relationship with customers. And that first opportunity we have is on our initial transaction fee. And that's effectively a markup on the real estate. This is a one-time fee that's baked into the share price, and it really reflects the value we create through sourcing and underwriting the supply, forming the LLC, aggregating the demand, and putting the operating agreement in place. All critical components that make co-ownership possible. What makes our business model truly unique, though, is that once a home enters the Pacaso ecosystem, it stays there indefinitely. It creates multiple recurring fee opportunities with significant margin upside. We generate recurring management fees for property operations, maintenance, furniture design and refresh, and our platform technology, all essential to delivering a great customer experience at scale. And another key stream is our financing. And we offer very unique financing. We offer integrated financing, which is not only creates value through fees, but has potential margin with interest, and also has a captive pipeline for future transactions via our loan portfolio. And finally, we are particularly proud of the vibrant secondary marketplace we've created. And that's super important, where owners can sell their individual ownership interests. This enhances liquidity and adds value to the overall co-ownership experience. And in summary, our model generates really a healthy mix of one-time and recurring fees, ensuring that value creation over the entire customer life cycle. Shifting gears to the full year results. So in 2024, we delivered $164.5 million in gross real estate transacted and associated service fees, less whole home sales, representing 16% year-over-year growth. And I just want to quickly break down this metric for those who are unfamiliar with it. So the first part, the gross real estate transacted, is the total dollar value of the co-ownership units during the period. And this metric's important because it indicates performance in our core business offering, right, which is selling co-owned real estate. We exclude whole home sales because they're not part of our core business offering. And in 2024, the gross real estate transacted less whole homes was $116.6 million, representing 22% year-over-year growth. The second part of that metric is the associated service fees. You guys could think of this as the real estate service fees. And this includes various streams such as resale fees, financing, recurring management fees, and reimbursable sales. And these fees are essential contributors to our overall performance. And in 2024, real estate service fees totaled $47.9 million, representing 6% year-over-year growth. And we kind of expect that to be very consistent over time. Our top line growth really underscores the strength of our co-ownership offering and confirms we delivered a luxury differentiated experience that's resonating with really a large and expanding audience. And we're proud of the execution that the team has undertook and really the ability to navigate through the challenging real estate market that we have today with a lot of discipline, a lot of focus. Turning to the next slide, in 2024, we delivered adjusted gross profit, excluding the impact of whole homes, of $23.6 million, representing 18% year-over-year growth. Our adjusted gross profit margin was 14.3%, showing a slight increase year-over-year. Now, we believe this non-GAAP financial metric is an important measure of our business performance, as it provides a cleaner view of our gross profit performance related to unit and resale transactions and homes managed during a period. It also enhances our comparability across reporting periods, removing non-cash and non-core activities. There are a few key differences between GAAP gross profit and this adjusted metric, which I just want to spend a moment on. So one, it excludes non-cash inventory valuation adjustments, which happen periodically and mostly pertain to whole home sales, which, as I mentioned, are not a core business activity. Two, it removes other non-cash items such as amortization. And three, it excludes the impact of whole home sales altogether, which again are not part of our core business activities. And while adjusted gross profit is critical in our operational insights, GAAP gross profit remains important, right? And so we talk about that as well in the Form 1. We present both metrics. And in our footnote here, we show GAAP gross profit performance in 2024 was $21.5 million, representing a 42% year-over-year increase. Now, just to spend a little bit more time on the margin. So while the increase in margin overall was a slight increase, when you actually unpack and you isolate the adjusted gross profit margin on our core offering, which is the gross real estate transacted, excluding the impact of whole homes, we saw a 250 basis point expansion year over year. It's just incredible. So up to 12.8%. And that margin expansion reflects just the strength of our customer demand, improved pricing strategy, and just clear value customers place on our model. In 2024, the adjusted EBITDA loss was $20.4 million, reflecting an improvement of $6.4 million or 24% year over year. And this progress reflects the impact of disciplined cost management, ongoing focus on